Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the S&P 500 ETF, ticker symbol SPY. And as I do each and every week, I leave my lines on the chart so you can see how the forecast panned out. And last week, I said that we would most likely go lower to test this support level right here, which is that horizontal flatline support that I drew last week. And look what happened yesterday. On Thursday, the 23rd, we came right down to my target price, formed very close to what would be considered a hammer pattern. The only difference is that a hammer pattern needs to have a slightly longer shadow underneath, 1.5 to 2 times the length of that body. It's very, very close, right? Borderline hammer pattern. That is bullish, by the way. And then today we had a higher high with a higher low. And while that's still a red candle, the good note is that it's a higher high, higher low. The crazy thing about what we're seeing here on the chart really is down at the very bottom where we're getting mixed signals. The stochastics oscillator turned lower, you see, almost crossing the %D line, while the CCI has crossed with a buy signal. Now, if I had to choose between the two, I'm going with the CCI. It's a much more sensitive indicator than the stochastics. It's much more reliable, and it generally gives a signal slightly before the stochastics makes the change. So with the CCI being a buy signal, I'm going to bet that the stochastics will most likely start turning up next week. Now, this weekend is Memorial Day holiday, so the markets are closed in the U.S. on Monday, so we will have a shortened trading week next week. So what does this all mean for the S&P next week? There's a gap down yesterday that still needs to be filled. I think that we're going to move up and possibly test this 20-period moving average right here. So that's going to be my forecast, that we will move up next week as a follow-through to this pivot point that we saw today forming on the 24th of May. Now, if we look at the VIX, which is inversely related to the S&P, we did hit my target numbers right here. You can see I said that we would move higher on the VIX. We did just that. And in the process, we are now pulling back on the VIX. You see that red candle right there, and the CCI is turning lower. So if we're expecting the S&P to go up next week, like I just mentioned, chances are the VIX is going to pull back and possibly test this support level right there. So I'm going to erase this line up here, and I'll leave my lines in place for next week so that we can analyze that and see how the forecast worked out. Now let's go right to the Qs, which is the Nasdaq market, QQQ. And you'll see my forecast was very similar to what we said on the S&P. I said we would move lower to test this support level that was drawn horizontally from the low on May 13th. That's called a horizontal flat line right there. And the CCI is turning up with a buy signal, while again, stochastics is going lower. So I'm going to bet on the CCI that it's now a buy signal, will most likely continue higher. And I think we will see a bounce off of this support next week in the Qs. I'm not expecting big super moves higher, but I am expecting the buyers to start moving in next week in the tech sector. Now, if we look at the Russell 2000, which is obviously a more broad-based index, I said we would go lower to test this support level. We did, but we didn't get the rally just yet. Now, hold that on the sidelines as I analyze these two candles right here. I think we're still going to move higher. From here, I'm going to erase this line. I think we're going to move up to fill the gap that was left on Thursday. I'm going to erase this line as well so that I can have a clean slate as to what we're going to expect next week. Next week, I think we're going to go higher, fill the gap, possibly move up to this 20-period moving average. But this is a 2-day pattern known as a harami. That is translated to be the pregnant candle. And that is a bullish sign, and it is as bullish as a bullish engulfing pattern. So that is the most significant buy signal that we're seeing out of all the markets today, and it's in the broad-based index of the Russell 2000, which tracks 2,000 stocks. You'll see the CCI is moving higher, not quite at a buy signal. It will have to cross over this green line or the minus 100 on that scale to be an official buy signal. But I think the Russell 2000 could carry all of the markets higher as the domino affects the buyers, more or less, and pushes the prices up. Now, finally, if you look at the diamonds, this one is bouncing just like I said we would. We did hit the pivot point yesterday. This is an official hammer pattern. You can see that the shadow is almost 3 times the length of the body of the candle, and the gap has not yet filled. So I think what I'll do here is I'm just going to move that line over. Let me first erase it, and I think that we will move up just like that to fill the gap, test this resistance up here, which is more or less a roll reversal. This used to be support back here. So the roll reversal will most likely take place, and that will hold as resistance. And again, mixed signals. Stochastics pointing lower, the CCI crossing with a buy signal higher. I'm going with the CCI. And the fact that we had moved lower here early in the week is now telling us, this lower volume is telling us the sellers are getting tired. So that's my forecast for all of the major markets. Please stay tuned to the Market Guys each and every week as I put out these weekly market reports. And be sure to visit our website, which is www.themarketguys.com. Click on the video tab, and you'll get more educational videos. And of course, if you're interested in me mentoring you in a one-on-one session for a 2-month period, just send me an email and I'll be more than happy to set up a call to see if you qualify for that. So that's it. Have a great long weekend, and we will talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.